What's up, people? Welcome on my YouTube channel. My name is Clifford Mlauzi, and in today's video I want to show you how you can actually enter trades, or how you can take trades after the news. So the idea is not trading during the news. The idea is trading after the news. So this one is more practical for people who are trading on funded accounts. So for you to avoid borrowing your funded accounts with the volatility that comes with the news, it's very important to trade after the news when the waves have died down. But if you still also want to apply the same risk management and maximize on this same strategy, then you can also watch this video. More especially if you're trading a personal account, yeah, you're welcome on this video also. And I'm gonna be showing how I took a trade on US30, and yeah, this is my trade on US30 right now, right? um, you can see that I actually took a very nice buy right here, and but that buy did not just come. I actually took that buy after the wave of the news has died down. Okay, so you can see that we're having a wave of news right now, and then the news has died down. Okay, right? So how did I came to a point of knowing that the market is going to reverse in this area and it's time to execute, right? And that's what we're going to look at today. So before we go any further, I want to show you like a screenshot that I took before, or how I analyzed, or before this trade, how it looked like. Okay, so right, so right here you can see a screenshot that I actually took. You can see that the market actually came in this area and we had to wait. You know, why are we waiting? Because we know that this is a very sensitive area and important area where price might come, not just come once, but price have to test at least 1 or 2 times. Yeah, so price come, tap into this area and then pushed up and then come back to tap on liquidity, right? Like to grab liquidity. As soon as price grab liquidity, it also grab liquidity on the upper side, and then we took a very nice buy, and we've been holding this trade for like 10 hours, if not 12 hours. And I want to show you exactly how I analyzed this trade and made this trade possible. All right, so if you're loving this video already, consider hitting the like button and subscribe to my YouTube channel for more YouTube content, for more Forex content, I mean. So right now, what I'm gonna do is I'm going to remove everything on my screen, right? I've removed everything on my screen. We want to analyze together to find out where are we entering the market. So be mindful that the best time frames that you should use, I should say, according to me, the best time frames that I prefer to use is actually a 1 hour for market bias. For market bias, it actually helps me to know exactly where the market is going. So the first thing you need to consider, that's the time frame for market bias. Once you have, and for you to know where the market is going, you just need to understand like market structure. Okay, so for the easiest way to understand market structure, what you have to do is just mark the recent high highs and the recent low lows. So let's say the market at this moment is somewhere around here, right? Somewhere around here, right? Now, if we talk about the recent highs and recent lows, we're talking about this is the recent high, this is the recent high that was broken, right? And after that recent high, yeah, after that recent high, we're having this recent low right there. So this is enough to tell us where the market is going. So for example, you can see that the market has actually broke to the upside, and this is like a break of structure, or I can say, yeah, let me put BOS. That's a break of structure. The market is pushing to the upside, and then down here, we are seeing that the market has not yet tested any. So this is telling us that our market of structure, we're in a bullish structure right now, okay? So the fact that we're in a bullish structure, we have actually known this direction because of the 1 hour time frame. So the next thing that we need to consider is to go on a 15-minute time frame just to look for possible areas where the market might be returning. So in the first place, we're going to mark multiple areas where we think are areas that might hold price. So the first area is this area. This is like the origin order block. And apart from that, we can also mark the beginning of this area right here. That's another order block. And we can also mark this area as another area of demand. So remember, we have actually marked almost three areas or three areas that we consider to be point of interest. But then in trading, what we need some confluences, other confirmations to tell us that, okay, to give us the confirmation that I think this area should really be considered. And we're going to use a Fibonacci from the top, from the bottom to the top. And remember, when we're using the Fibonacci, we only consider areas that are below the 80 Fib level percent. So you can write that one down. You need to only consider areas that are below the 80%. So this is our 80%. And yeah, so this is our 80%. So because of that, we are marking this area as our area of what? Point of interest. So we can actually say that that's our POI. Right now we can remove our Fibonacci, we can remove the other areas. So you know that when another thing is that when during news, the market is actually likely like to move big, to move very big. So don't expect the market during news to make turns just somewhere there and then start going up. No, the market will actually need to make big moves before it starts going up. But the most important thing is just to know where the price might reverse and price might choose whatever direction. So in this case, this area, this channel or this zone is considered to be our demand zone, okay? It's considered to be our demand zone. Why? Because that's where we're looking forward to see prices changing direction, buying. Okay, so now let's go on a 1 minute time frame to see how we executed the trade. All right. We're going on a 1 minute time frame to see how we executed the trade. What confirmation did we use to know that it's time to sell or it's time to buy? All right. So when you come closely on this one, we're going to use the same approach that I've talked about in my previous videos. If you haven't watched my video, I have almost the same approach that I use on almost all trades. So the first thing is that we are seeing the market has tapped into our zone, registered into our zone. So once we have seen market registering in our zone like this, we just know that the market has not yet finished moving or the market has not yet finished dropping. Okay, so because like the market just closed with a wick, did not even close in our zone, so it's not good time to buy, right? So second thing is that you can see that the market now came again, right? Came again. So in this case, as the market coming again was to actually come to grab the liquidity that was down here. So I'm gonna put this because a lot of people, when they see price just tapping into this area, they start rushing to buy because they know that the market might now be going up. But in most cases, this is what will happen to people who buy in this area because you need to first wait for candles to close below. That's like our confirmation to know that the trade has now started moving or has now started changing direction. So you can see that price actually came, grabbed liquidity for the people that entered the market early, and next the market also came down and closed with multiple candles. So you can see that we are closing with multiple candles. So now the idea for now on how I entered this particular trade was to see if price now, after closing with multiple candles, I needed to see price coming to grab this liquidity because this is some sort of because this closing of candles down here, it's our like market forming liquidity, and we need to see price coming down to take down liquidity. As this liquidity is taken out, and then that's when we know that it's time to start looking for buys. So you can see that as soon as the market went up, it actually came down. And before it came down, it created a high. And this is the high right there. And you see that it created a high and started coming down. It came down, took out all the liquidity at the bottom. That is what we've been waiting for. After that had happened, we saw the market jumping to the upside, right? And the market jumped, broke our recent high on that our recent high, which is this one, and closed with almost two candles, one, two. That's like multiple candles, and that's what we need to see. If the market just closed with one candle, we might not consider that one as the time as it has come time to buy. And after that, the market will come down in our order block. So in our order block can be this area or can be any other area. So the minute actually the market actually came back in this zone, I actually took a trade somewhere around there. Okay. So when I took a trade somewhere around there, my stop loss was just below this thrust, the beginning of this thrust. But you can actually put it lower, can actually put it here, but in my case, because I use high lot sizes, I actually put it so close so that I don't lose a lot, because I want to know if I'm wrong, the market should prove me right away. And as soon as we did that, the market just kept on flying, just kept on flying, just kept on flying. Okay, you can see, and this is like the power of trading after the news, right? So don't actually rush to trade before to trade the news or whatsoever. First, you need just to wait, analyze your chart and wait for the news to happen and wait for the trade to come in your direction. So you can actually see this is how far the market went, and we've been holding from yesterday till today. And this actually happened on 11th. It actually happened on 11th January, and we have closed the trade on 12th January. So this is how we are capitalized. And when the market was somewhere around here, we actually identified another area, this one, and we noticed that this area was broken. And as soon as broken, the market actually tested again. And when the market tested, we actually took another buy right there. Yeah, we took another buy right there, and we kept on riding the trade. And as we are going, we also witnessed another movement whereby we saw price breaking this high again. And as soon as price broke that high, we took another buy again. So I'm actually going to show you screenshots on how we did all this thing. And our stop loss was just somewhere around there. And this was the trade, okay? And this was our exit point. And this is how we did everything. This is how we executed everything. And right now, I want to show you like the final results of how everything went from the pictures that I've showed you. Yeah, I'll start from here. So this is like how it all started. And this is where we're entering the trade. We waited for price to come in this area to register this area and then come back. As soon as price came back, that's when we are entering the market, and the market just kept on pushing to the upside. So we can see that the market went up nicely, and we added another trade. The market continued pushing to the upside, and the market continued pushing to the upside. And then when we reached here, we also added another trade, and we actually put our stop loss somewhere around there to stop us to avoid losing everything that we have made. And the market kept on moving. And as soon as the market actually came down there, it actually took me out of the trade because my stop loss was right there. But still, the trade kept on moving. You can actually see, and up to the time the market actually hit TP. Guys, this is really, really, very amazing. And you can actually see it's very important to trade after the news, not during the news, because during the news there's a lot of volatility. The market can go either way because nobody knows the direction of the move until the direction is done. So the best way is actually just stick to your technical analysis and actually wait for the market to come in a direction so that you can make very good decisions with proper risk management. Thank you for watching this video, and if you have learned something from this video, consider liking my video, subscribe to my YouTube channel for more forex content, and you can also check my previous videos on what I teach about forex. Otherwise, thank you so much and have a very good day. Peace out.